Yeah, there we go. I think I've got the volume here. Good to see y'all. Christopher Inks with Texas West Capital checking in with you guys just a few minutes after 11 a.m. here on Tuesday, the 9th of March, 2021, in beautiful Boerne, Texas, just north of San Antonio. Y'all might have seen, if you follow me on Twitter, a few photos this morning. Just kind of giving you guys an idea of kind of my area out here. I tend to be pretty private. One thing about that is that I find it really distasteful when people kind of, try to get people to purchase from them based on, their lifestyle. So, you go out here and you say, okay, well, here are my cars, here's my house, everything. And so, the idea being, listen, if you want to have all this, then you need to do what I'm doing or something silly like that. Sadly, people do that because the people that are going to buy from them are the ones that really need to. They're the ones that feel like they really need to. They're the ones that are in much more of a dire straits situation. I want people with us who really want to learn how to trade, who really want to make, a lifestyle out of trading. And then there's always, the safety issue. There's a bunch of crazy people online. But hopefully you guys enjoyed the photos. I'll share a little bit more, when I'm feeling like that's probably a good thing to do. But if you're new to following me, you won't ever see a whole bunch of my lifestyle online for those reasons. So who's here? Hank is here. What's going on, man? Chris Day checking in. Spiral Architect. Crypto Mowgli, Farm D, Nevlusian, Data. Man, who else is here? Martin, what's going on? Budman is here. Says happy $15 of minimum wage America. I don't know, man. Didn't they say they clipped that out of the package? I haven't seen what the Senate passed yet. But I thought they clipped the $15 minimum wage. Just gonna revisit it later, like resubmit it later. Hey there, Arrow Quinn. Good to see you. Thank you, sir. Thank you. I appreciate that. Train, what's going on? Cody's here as well. Man, some of my favorite people checking in. Love you guys, man. Glad to have you all here. Baker, what's up, man? And Alex is here. I am, Alex. I hope you're doing well. Also, if you're new to us or what we do here, you haven't taken the plunge yet, check us out at howtotradetowin.com. Would love to have you there. I still haven't updated the all this up here. Like I said, well over 60 hours of educational video content right now. We got chart requests, which I'm getting caught up on finally after we had all those days of power outage there. Really set me behind. We had almost a week of power outage, 4 days, I think. So just busting my rear and trying to get all that caught up. But we do, have those setups as well as the daily and intraday assets that we update, about 20 of them or so. Plus, we now have our 4 or 5, I guess it's 5 crypto indexes, right, that we do twice a week now. Ship perp, mid perp, exchange perp, DeFi perp, and alt perp indexes to kind of hopefully help you figure out, if the index itself is kind of coming to a head, then that might let you know that, hey, you might want to go ahead and start protecting your profits that are in the coins that make up that particular index and stuff like that. Or if it looks like it's about to break out and head up, then maybe you want to look at coins that are in that index as far as potential opportunities there. So, again, always adding more stuff here. We're looking at adding a few others. We've had some requests for ADA and Polkadot. So I'm taking a look and seeing if we can go ahead and add those into the daily and intraday updates as well. So, tons of stuff here, guys, man. We'd love to have you here. A lot of the people that you see actually talking in the channel are members. And you know what? They're absolutely fantastic people. One of the coolest things I get to do is I get to meet all these people from around the world. And that's pretty awesome to me. But they're really great people. So anyway, join us, man. We'd love to have you here. Let's see here. Alex from Fox Lake, Illinois. Glad to have you here, buddy. Good to see you checking in. Hank is saying that, yeah, the minimum wage was cut from the Senate bill. Yeah, that's what I thought. By the way, if you guys are checking that, there's a lot of talk about the idea that this stimulus is coming in. And, I think a lot of pro-Bitcoin, traders are hoping, or maybe they've convinced themselves that all that money is going to pour into to Bitcoin. I'm not sure it's going to. Again, the trend we're seeing is people are paying off debt more than anything else right now. Which, by the way, guys, as paying off debt is deflationary. You're destroying dollars, basically. You're taking, remember, we're a debt-based economy. We're based on credit. So credit has to expand for the economy to continue doing well. Anything else, whether it's just holding even or contracting, is bad for the economy. It makes things really tough because the only way that it works, that you take out loans and whatnot, the only way that makes any real sense is if you're paying back with cheaper dollars in the future. So as long as the money supply continues to inflate, excuse me, that's good for what it is. But when that doesn't happen, if either the printing of dollars slows down, or people are taking out less credit, or people are paying off the credit that they already have, that's all deflationary. And again, I see some otherwise really intelligent people that still don't understand, and they still haven't gone into, I don't get this, guys. If you're online in front of in front of the world, basically, why would you say something that you have not verified? I don't get it. It's like this huge thing that really kind of bugs me about social media. And so one of those big things is these otherwise very intelligent people start talking about inflation because the government's printing dollars or some nonsense like that. A complete misunderstanding, a complete lack of understanding of what QE actually is. And so, that becomes, that's disturbing to me. So, just a word of the wise to you guys there, before you're posting anything, make sure, don't just post because somebody else that you maybe follow or think is pretty smart or whatever, post it, verify it. Always look back and see, does it really make sense? Because there are a lot of very intelligent people, guys, who don't have a very strong economics or especially a macroeconomics background. And so not having that and thinking that all this QE is just, is inflationary is just silly. When you really find out what QE is, you see that it's not inflationary. It's actually more along the lines of deflationary. So, it is what it is. And if you don't believe me, all you have to do, guys, is look over the last 10 years of QE that we've had, and the fact that inflation, the way the government measures it, has not been able to get rarely even to 2%. Most of the time it's spent at 1% or below. And even during 2015 or 16, right around there was a little time where it was actually deflationary, not inflationary at all. And you say, oh, but what about, the stock market's going up and all that stuff? Well, yeah, some things are going to be hit by that. So your, QE is an asset inflation attempt. The idea is if the stock market's rising, then people feel better about the economy and they go and spend money and they go and take out new credit. That's the idea. Remember, I've told you before, the Fed can't do anything itself right now to really, it can't do anything directly to really have a whole lot of effect on inflation or deflation, even though it believes it does, or it believes it may be able to. But what they can do is they can indirectly affect it. So the idea is to get you to believe things or to do the things that they need you to do to keep the inflation going. Remember, inflation actually comes at the bank level. Anything that QE is doing there, really, it's going to your prime dealers there, and then they take that money and they're buying treasuries with it. So I mean, it's really just becomes more of a just a movement in the ledger book, really, rather than really money kind of being printed and flowing throughout the economy. If you want the kind of inflation you think about when you say money printer goes burr, what you're looking for is banks lending. You're looking for increased lending. You're looking for more loans being taken out. You're looking for less loans being paid off as well. Because when you pay off a loan, that money comes out of circulation and goes back into the bank. It's destruction of dollars. It's not enough just to simply print something, guys. And I think this has been a big misnomer because of this whole Plan B thing. which is supply side economics. Basically they said all Plan B says is, supply really is all that matters. That's what Plan B says. And that isn't the truth. Realistically, what matters is not just supply. Supply is a big part of it. If you have a dwindling supply or a limited supply of a thing that people want, that's positive. If you have a dwindling supply or a lack of supply of something that people just really don't care about, your clipped toenails, for instance, it doesn't make them more valuable because there's less of them out there. But that seems, and so this kind of narrative really permeates, especially, social media, but especially crypto Twitter, which has become this big, huge, part of what we do with crypto. And so then that kind of goes into the whole money printer thing. Government's printing all these dollars. That's the thought. And so all this extra supply means, it's going to go down. But again, you have to have more than just supply. You can print all the dollars you want, but if they sit there and they don't actually get out and get spent and churn through the economy, there's no inflationary effect. Okay? I can print, the government can go print $10 trillion, and if it just sits in the bank, there's no inflationary effect, guys. And so most of the money that gets printed with the QE basically sits in the reserves at the bank, or at the Fed Reserve in the vault there, which legally cannot be touched. It cannot be put into the economy. So indirectly, what it's supposed to do is get banks to create more loans. So the banks can reference the Fed, the money that's in the Fed vault there. They can reference that as having the reserves to make the loans. So it's not just that the government prints it, but the banks have to actually then create more loans. And so that's where the big misunderstanding comes for most people in social media and crypto Twitter and whatnot. And that's why you don't see, inflation running rampant, in the way the government tracks it, which is all that matters. All that matters is the way the government tracks it, because what they do is based on how they view it. So, if things aren't going the way they expect it to do, then, by the way that they track it, then they're going to do something else. Now, you also have to understand real inflation and stuff like that, because, real interest rates, that's why we have, the bonds kind of popping up a bit there. And everybody's like, wait, what the heck just happened? Some I talked about, last year, about what was likely going to happen this year. So that's what we're seeing now. So just some things to kind of keep in mind there, guys. Let me see here. Who's here? Oh, let me see here. JP, what's going on, man? Glad you could make it, man. What's going on, Dominicus? I see you there. Farm B. Man, my eyes are a little bit, Farm D there. My eyes are a little bit jacked up this morning, guys. So you have to forgive me if I have a little bit of trouble reading what you guys got here. Let me see here. Farm D says, wondering if Tesla is finishing its wave 2 right now. It's 23.6, 31.8, too small of a retrace or sufficient for a short wave 2 potentially. Well, I mean, if your wave 2 is only pulling, okay. So it gets, I think historically, I believe the measurement at 23.6 is about 15% of the time. 5% of the time, something like that. It's really small, but it's not impossible. When you get a very short wave 2 or a very short wave 4, what that's telling you is the market is very much, if you're getting a wave 2 on a decline, so a wave 2 will pull back up, and it's only getting to, 23.6 or 31.8, it's telling you the market is very bearish. There's a lot of selling, so much selling comparative to demand, buying, that it can't do a proper retrace. And again, if it's going upward, if you're going if you've got an uptrend and you've got a wave 2 on the pullback, and it only comes back, that 23.6 to 31.8 kind of area there, then what that's telling you is there's significantly more demand than supply. And so again, it can't get that full retrace that it should usually get. So if it's a wave 2 pullback on an advance, then it tells you the market's really exceptionally bullish. If it's a wave 2 pullback on a decline, so the trend is down, it's a wave 2 pullback upward, then it tells you the market is extremely bearish at that. Now, Tesla, and again, in Nasdaq were the two things I told you guys to watch last year. I said when they finally rolled over, we're going to roll over, that it was going to be probably the indication that the top was in, because they had been so much leading they had led everything up so much. On the rise, Nasdaq and Tesla were just these huge things that just kept pushing. They were pulling everything up with them. We talked about how the breadth of stocks had shrank incredibly, even though price was rising, right? It was led by a few technology companies like Tesla. So Nasdaq, which is tech heavy, if it started to falter, that would be probably a good clue that the market tops had been reached. And then, again, looking at Tesla maybe being the ultimate thing there, Tesla drawing in so much money with it, so much enthusiasm in it, that when it started waning, all of a sudden it's one of just a few stocks that are really kind of holding everything up. So if it goes down, that's a huge bit of supply pressure on the overall market. And so, yeah, I think that's definitely still something to watch. Sure. Hey there, Block Tech. Good to see you. Let me see here. Data, what's going on there? Let's see here. Chemo, what's going on? I said, if you check the Bitcoin chart on March 27, 2020, on the day Trump signed the stimulus, Bitcoin had 3 days of downside, 15% or so. Yeah. Again, these things like these news events are knee-jerk reactionary. They are not trend determinative, I guess is the best way to say it. Which comes to a surprise to most traders, especially if you're newer. People tend to believe that the news is what makes the price move. Well, no. News happens all the time. Price happens all the time. There's a lot of big moves that coincide with news that tend to get ignored. It's only when it fits the narrative that, we tend to go, oh, look, that's what it was. But if you look back historically, if you look at the different big events that have happened historically, here in the U.S. anyway, Socioeconomic Theory of Finance, great book for you guys. There's a whole bunch of examples in there. But, you'll see where, things should have gone. If it is true that news actually determines the trend, then things should have happened. The trend should have changed when certain news events happened, but instead it didn't. It did the opposite. So, again, as I've been, prone to say for a very long time now, I believe all the information is in the charts already. It just depends on if you see it. You just have to be able to see it. And a lot of times our emotional bias is, to that one side that we often miss, where the chart is saying, hey, listen, wake up, it's not doing this. So, yeah. Eric Quinn, you said your clipped toenails are quite valuable. Thank you very much. Oh, man. Cody says maybe one or two more ripper highs in stocks before the end of days. Doubt a super cycle top ends in a whimper. Well, it hasn't really ended on a whimper, though. If you think about it, we'll look at the stock market here in a minute. But remember, we had that big move last year. And I told you, I think that maybe that might have been the warning. That was the, hey, this is the shot. Look, pay attention, guys. You've got how long this is going to up here as your kind of howdy do that to get your affairs in order before it goes down. I think, Cody, what you're maybe saying is something like a blow off top or something. And while they do happen, they're definitely not required. As a matter of fact, a lot of really strong reversals historically have come from things other than blow off type tops. More of this, the whimper that you're talking about, because basically it kind of catches people off guard. It's one of these things that kind of happens. It happens and happens and happens, and finally, there's nothing left in the market to support price, and then the big move comes. You've got to kind of squash out all the others with that are still bullish with it, and so they get knocked out bit by bit by bit by bit until you've knocked out enough bricks that are supporting price that it can't support anymore and price tumbles. So, yeah. Let me see here. Well, Hank, it's not only the U.S. that's lost its relationship with facts and truth. I think it's most governments these days, really. But, government is what it is. You guys have to remember, government's not really there for you. In no country in this world is government there for you. It's for the people who run government. That's really the way it comes down to. And, unfortunately, it's a hard sell to people who believe that government should be out there doing for them. That's the grand idea, right? Government works for you. It does, you're not a servant under it. it serves you, right? But what do we find out? We find out that governments basically tend to just kind of lord over you, unfortunately. So yeah. Kerouac, you're very welcome, buddy. Glad to have you checking in, man. Let me see here. Hey there, Neil. It's good to see you. Glad you could catch it here. Too bad you can't be watching them live all the time because of the time zone difference. Yeah, you know, I do what I can as far as the time zones go, but, you know, sadly, you know, we do have members like yourself who are unfortunately in other areas of the world, which the live streams do become a bit difficult to watch. But I do try. Let me see here. William, what's up? He says, so when the economy starts to reopen, gradually likely, does that imply more money will enter circulation as more is spent and loaned? So then the effects of the printing could be seen? That's the hope. That is what would need to happen. The problem is if the economy is not in the position that government wants you to think it's in at the moment, and it's actually worse off, then, you know, we're likely to see the economy go off a cliff, basically, which would then just, and right now, because of the way in which QE works and whatever, it's conditioned people to buy into zombie, you know, one of the big issues are these zombie companies, these companies that should be out of business. But because people are buying into it because they believe the Fed is going to keep it afloat, you know, and then so when the Fed stops keeping it afloat, all of a sudden, all this money that's in these zombies companies just gets trashed. It gets lost. And these zombie companies end up going out of business, which means more unemployment, which means, you know, so all this thing continues to happen. And this becomes really bad here, and it becomes difficult because if the dollar's rising, then again, you're paying back debt with more expensive dollars. And if you're already, you know, what we would term a zombie company, you're not doing too well as it is. So how do you now pay back all this extra loans and stuff you're getting without, you know, with this more expensive dollars, and you're already kind of doing really bad. You know, you're already on the verge of going under. And so that's another big part of what's going on with everything right now. So yeah, but if the economy were to open up and things were to get going, yes, that would be the idea, you know. But people have to buy into that idea. People have to buy in. Companies have to buy in to the idea that the economy is getting better, that things are getting better, and they will continue to get better. Because if they don't, then the stimulus money for your individuals, whatever, are they going to go to pay off debt, or they're going in the bank as savings? Either way, it's deflationary. If that money is not being spent, you have to understand, again, in this type of environment we're in with most, I guess probably with all governments at this point, or just about all probably, but you have to continually spend money. You have to spend money to keep the economy going. You have to take out more debt, spend more money, take out more debt, spend more money. And that's what causes the big boom and bust cycles, because there's only so much the economy can take before it blows up and retracts back to the mean. You know, it comes back down to the average there, and then it can start again, you know, once it balances back out. Because, you know, as you continue to take out more debt and whatnot, because, again, you know, we talk about the Fed, and the Fed messes with the interest rates, or, you know, with the yield curve here, and that creates a false sense of what's really going on, a false sense of risk. And if you can't gauge risk appropriately, correctly, then you're setting yourself up to get caught, right? To lose money. And so, you know, they make risk look like it's much less than what it is, you know, by, again, messing with interest rates, you know, putting lower than what the market says they should be, encouraging more wasteful spending, encouraging more people to go out and borrow more money, and then to create more projects and, you know, and spend it on more stuff. But again, that doesn't go unchecked. That doesn't go it's you know, you always have a price to pay at the end of the day. Nothing's free in this world. And so, you know, that ends up creating these booms, which then result in busts, the big boom bust cycle. And people want to blame it on capitalism. It's not capitalism. It's government intervention in the free market. That's what it is. Because government distorts risk. And if you've got distorted risk, you're going to have malinvestment. If you study, that's a term used by Austrian economists, is malinvestment. And it's just basically money put to things that it shouldn't be put to. Money could be better spent elsewhere, but because of the distortion of risk by the government, that money doesn't go into those things it should be going into. It goes into things in which it's just a waste. And then of course you get things again like zombie companies and whatnot that sit up there that when things crash down, they go out of business. People lose jobs. People lose jobs. They can't pay. Well, first of all, a company goes out of business. It can't pay its creditors. It can't pay its lease payments on property, its land or whatever. It has to sell at a discount. If it owns property, the big part of being, if you understand what happened with Sears back, a few decades ago. Remember, Sears was about to go out of business and got bought. And the reason what's-his-face bought it was because of the land underneath. Not because of the Sears name or anything, but because of the land. McDonald's is not in the franchising of what it does business. It's in the real estate business. But the problem is, if you are and you go under, you have to sell that real estate. And you're going to be forced to sell it at a loss, most likely, to pay off your creditors, which brings the value of other property, similar property down. And so that gets into that whole debt deflation spiral that we talk about. So there's a lot of all this underlying stuff kind of going on here that most people don't know or don't pay attention to. But people have to, companies, owners, and individuals, whatever, have to believe that that things are going to get better, that they're getting better, because that will encourage them to not save and instead spend and take out more debt, which is what the economy needs to continue heading up. That's what the government needs. So yeah, but even if you send out direct payments, everybody's like, oh, all this stimulus money coming out, and it's going to go into the markets and all this. Some of it may, but but just because it's being printed and sent out doesn't mean it's going to have the effect that you think it's going to have. If a large group of people decide, listen, I need to pay off debt, I need to stick the rest in the bank because I want to be okay here, I want to have a little cushion. All of a sudden, all that money's getting put out there, but it's deflationary. It's not going to increase. It's not getting rotated, churned throughout the economy. So yeah. Hopefully that makes sense, guys. I didn't mean to go on a long tangent here, but there's so much into this. I want you guys to understand it's not simply money printer goes burr, there's all this money the government's printing. How is it printing? Where is it going? How is it getting out there? What's being done with it? All these things are part of whether it's actually going to be inflationary or not. But so far, when you're doing QE, QE is not inflationary in and of itself. It's deflationary. Because again, it's just moving money around on the books, basically. When it goes to your prime dealers buy treasuries, and so money isn't actually entering the economy and spinning all around everywhere. So there's no, real inflationary effect on it other than on your assets, which again, all part of the whole, primary dealer thing. Why was DXY and Bitcoin pumping at the same time? 10 times Nina wants to know. Because they don't, when you're looking at correlations or, lack of correlation there, it's not always a minute-to-minute thing, guys. So in areas, I've shown this before, but in areas where maybe the dollar's moving sideways, so it's going up, but in the larger time frame, it's just kind of moving sideways. That, that's the bigger picture. It's just moving sideways. And so in that, the movement up might have a short-term effect on asset prices, a negative effect on asset prices, but in the grand scheme of things, it's going to be limited because overall price is just going up. When it's actually going up, when it's actually trending up on those larger time frames, then that's where you see the negative, the continued negative correlation, or the negative reaction there with the other assets. But yeah, I mean, just because DXY goes up for a day doesn't mean everything else has to go down for a day. So it's always more important to step back out to those much larger time frames with all that, because you're going to have overlap. Things don't always work exactly, in step, because people have to move out of one asset and into another, and that takes time. So yeah. The relief package money comes from the Treasury, There's not even anywhere near enough time to explain the nuances between the Fed and the Treasury. But yeah, no, direct payments that are coming out right now come from the Treasury, which is money that's earmarked from the Fed that has to be spent at a specific time, by a specific date. If you're in government, if you're in any government job and in your department or wherever has money allocated to it from the government, they have a time frame in which they have to spend that money. And if they don't spend that money, it just goes back to the government. They lose it. So the Treasury is the same thing. The Treasury, I think, had to get its money out sometime this month, I think, money that's in there. But again, even that is just a portion of the money printer goes burr kind of thing that everybody talks about. So yeah, and really, at the end of the day, the amount of money that is actually, even this $1,400 thing per person or whatever, within the limits and all that, even that is very insignificant compared to how much debt is out there. The idea that this is going to have that these direct payments are going to have some large positive impact on inflation, positive impact meaning that it causes, that it results in inflation. I think, just in general, I think is just not really logical. I think it's much more wishful thinking with that. But yeah, the money that comes out directly to the people, that comes in the form of these stimulus checks or whatever, comes from the Treasury. The Fed, by law, is not allowed to send direct payments out. As a matter of fact, in order for the Fed to do what it's doing right now with the companies, via QE, they had to create multiple intermediaries because the Fed could not directly go to the company and say, "Hey, here's a buck." They have to go through this company, through this this thing that it created, which has to then send the money to this thing that was created, which then has to send the money to this thing which was created, and then it can go, kind of idea. And honestly, I'm going to be honest with you, I'm not sure it's entirely legal the way in which they've done it, and there are a lot of questions on that right now. But for right now, they're allowing it to happen. The idea is that the Fed shouldn't be directly sending money out to anybody. Now, Congress can go in there at any time, and pass a law that says, okay, the Fed can do UBI or something, universal basic income, something like that. But right now, that is illegal here in the U.S. Let me see here. Let me kind of catch up with you guys here again real quick. Let's see. So anyway, okay, yeah. So I'll get back with y'all here. Let's kind of look real quick here where we're at. Hopefully, you guys are learning a little bit here. That's the goal of what I try and do here. Get you even more than just what the charts say, right? But realistically, right now, I see two possibilities. We have the two counts. We have a bullish red count, which would suggest, again, we've continued to look at this as potentially being a 3 and then this being a 4, right? So the red count would suggest that 3 here is done, and then this is maybe a WXY or something for a 4. And then the red count says this is wave 5 in progress, okay? If it is, then we should expect, I think I'm kind of looking at this where we've got a 1 and then, an ABC down, ABC up, and then 1, 2, 3, 4, 5. So this expanded flat for a wave 2. And then from there, I've got it as a 1, 2, 3, 4, 5. So this gives us a 1, 2. Notice this wave 1 ends near where kind of this area of wave 1 kind of ended. And then we pull back for a short 2, which finds support on the pivot. So that's the bullish thing I talked about earlier this week. Or let me see here. I guess that would have been, earlier this week with Discord. We talked about how this was bullish here, the bounce off the pivot, and it goes up. So, okay, that's good. And so that would suggest that potentially we're in this wave 3 here, this 1, 2, 3. And so that has a minimum target up here of 58,371. All right? And that'll get you near the previous all-time high there. Now, that's the possibility right now, but it has to get above. This is the 4-hour. It's on the 1 hour right here. Let me zoom out a bit. This is the 4-hour supply structure here. And as you can see, price is having a hard time here. So it pushed up in here, immediately sunk back, pushed up again, tried to push up again, immediately sunk back, trying to push up again, immediately getting sunk back. And so at the same time, 4-hour Stochh RSI has been topped out. It's turning back down here and overbought. RSI popped up into overbought. It's now kind of hovering around that at this resistance area here. So this other possibility, if we look at this as a wave down here, again, as potentially an A, then we've got this retracement here to just about the 78.6, which is right around the top of this, this supply structure. So, it is possible that we maybe have a here and then an ABC here. And of this, this count here may actually be like a 1, 2, 3, 4 kind of 5 thing rather than the way I have it here. But the idea is if this is an A and this is a B up here, then we should likely get a rejection in this area and come on back down. And price is then, at least to this 39,40,000 area for wave C. Why? Because if this was the top here, what we just had, then, wave C, we generally look to, to be equal to wave A. And so that comes right down here around 39,479 or so. Now, most of the time, price will end up going lower than just 100%. But we always look at that as our initial target. And that kind of gets you right into, into this whole area right here, which is a good area. As you can see, it's also right here at this high volume node, kind of sticks out of here a bit, even though you've got larger nodes down here. So this is kind of what I'm watching at the moment. I'm kind of seeing, do we get a rejection from here? If we get a rejection from here, does price drop below this swing high? Because here's the thing. If this red count is correct, then price should not drop down below wave 1 here, which is 51,851 and 80 cents. Price should remain above that as it continues going up there. But so that'll be my first thing I'll look at, is that, and then I'm going to look at this ascending channel support here in this 1 hour, 4 hour pivot right here at around 49,530 or so. These are the areas I'm interested in watching if price is pulling back. If we're pushing down through all this and we're dropping below that pivot, to me, that when you're looking at that, that should increase the odds significantly that you're probably looking at an A and a B and then a C playing out still. But as long as price remains especially above this 51,851 and 80 cents area here, this wave 1, especially if price stays above that and continues pushing up here, we're definitely looking at staying long up here until 58,371. That's the wave 3. And you get your pullback for your wave 4, and you get your wave 5 up a bit higher. But that'll only be 1, 2, 3. And then you'll get a pullback again for 4, and then you'll get a 5 on the advance off that. So we got to kind of see, how does this play out right here where we're at the moment. Right now we've got consolidation on the ascending channel support, but below this, this supply structure here. So for the 4 hour, there's a lot of room here for price to move down, right? 1 hour says, well, maybe. 1 hour says, listen, we're resetting into oversold already. But the 1 hour does have this bearish divergence up here on RSI. And so the idea being, if it continues to push down here a bit, then we should see a stronger push down. So, if it gets down here maybe around 53,480, 53,500, right around there, then we should see a stronger move down here toward, 5,200, 52,200, 52,250 kind of area. It should be a pretty easy drop, I think, toward that. And then we'll see if it can work its way down to the pivot. And then once below the pivot, again, that kind of works everything up. If it's pulling back through here and it gets below this swing low right here, well, I've got labeled as wave 2 here. So it's right around 46,312 or so. Whatever it is on your chart, this is the Kraken chart. But this pullback right here, if price gets below that, right now it's only a 3-wave movement up. So if it drops below that, that's your big clue that, hey, we've probably got an A and a B and we've got a C coming. At least down to that, that 30, what I say there, from this top up here, 39,480, 39,500 kind of area, at least, that far. But what we'll be looking for is 5 waves down off that top there, 5 that takes you below this swing A, this wave A swing low here. Let me see here. What's going on, Mark? Hey, better late than never, buddy. Let me see here. Is that Sixer? What's going on, man? He says, I'm an OG follower from way back in 2018. Man, when I first started doing the live streams, huh? He said, used to tune in every day then. Your teachings helped me with fundamentals quite a bit at the time. Glad to see you're still doing well. Cheers, bud. Hey, man, glad to see you checking back in with me, man. Man, how things have changed, right? How I've grown is what I've done here since then. Let me see here. William, what's going on, man? He says, but if the economy gradually reopens, does that mean that increased money supply will meet less products, less because of unemployment, meaning inflation? Also, does selling bonds take money out of circulation, which fights inflation? So why is the Fed suppressing rates? Sorry. Oh, my gosh. Let me see here. So let me see what your questions here. Yeah, Imran, or guys, I hope I said your name correctly. Yeah, I'm going to do gold here in just a minute. Yeah, we're going to jump on over there. Let me see here. So you're looking at increased money supply meets less products. So your assumption is that the economy is going to reopen and that's going to create more income, I think is what you're saying. So increased money supply in that way, if I'm understanding you correctly. And then there's going to be less products because of unemployment. We'll need less products. I'm not sure I'm getting the connection between less products because of unemployment, meaning inflation. Well, the only inflation in reality is just the money supply, okay? You can't, it's not really correct to say that prices are inflating. Prices are rising or declining. The money supply is inflating or deflating. In other words, there's more dollars being created or less dollars being created. And like I said, it goes on beyond that. It's are they being created and entering the economy and circulating through it? Because if you can print all the dollar bills you want, but if they sit in a bank, it's not inflationary as far as it results in higher prices. Because the money isn't churning, it isn't moving throughout the economy, it's just sitting there. So there's no inflationary effect that leads to a rise in prices. I hope that makes sense. Let me see here. Let me see here. TV Canal says Bitcoin stop at the 70.5 to 78.6. Looks like bears got under control, got the price under control. We'll see. We're not seeing any strong pullback yet, but this may just be some rotation into selling here, or basically selling into shorts here. And if this is a top here, we should see it accelerate down, as I said here. Once it drops a little bit, accelerate through this area here to that mid 52s, low 52s area here. This previous area of resistance here. If I draw it on here, I'm talking about this, talking about this kind of area right here, which is more or less that 51.7 to 52.6 kind of area. What you want to see is if you're bullish, you want to see price. If you're immediately bullish, you want to see price, if it's going to pull back, find support in that area and then push up. If you're dropping through that area, that really increases the odds that this may be a top here, in the form of maybe a wave B, and you've still got further downside to a wave C from that. Yeah. Let me see here. Real quick here, we'll jump to the dollar and then we'll jump to gold. So the dollar here, the dollar's been doing a thing, man. So, this movement up here, the extent of this movement in the advance above the swing high had me come back and look at the bottom likely being in here. This move up above this swing high right here, this 91.602, that really is bullish. So I've gone back here and I'm kind of looking as the bottom being in back in January. Now, we still need to see further upside. Again, we still need to see it getting above this wave 4 up here at about 94.742 kind of area. I guess it's right about there. We still need to see it get above. If we get above that, then I'm really feeling bullish about the dollar. Right now, it's making a good argument for it. And So what I'm looking for here is maybe like a 1-2 done and then a 1-2. And we're working up here. This advance off wave 2 here right now has only hit basically the 23.6. The 50%'s right here around the pivot. 38.2 right there. If I'm looking at this right here as a 1-2, then, this is a pretty short wave here. Now, it's at the 100%, which, again, would look would normally look corrective, except that it's made a new higher high here, above the previous high. So this won't be corrective here. But the way I would look at this is probably, I'm thinking this is probably going to be like a 1-2 here. And so just a subdivision of this wave 3. And at that point, we may only get the 38.2 here. And so if we only get that 38.2 on that, I mean, again, this becomes that short wave 2 kind of scenario we talked about. And at that point, we get a wave 3 up here at around 94.803. We get a wave 4 pullback to around 93.649. And then we get a wave 5 up here at 95.517. What does that do? Well, again, that takes us above that wave 4 right there. It takes us above the area we really need to get above. And that just becomes then a really extended wave 3 on that. And you have your wave 4 pullback and your wave 5 up. So on the DXY, I'm interested in this pivot holding. We can see that on the 4-hour here, we've already, just this small short pullback here has already resulted in the Stochh RSI dipping almost to the bottom here of oversold. But I think right now, I think it's just potentially just an A here, and then we'll get a B up, or maybe doing a B as a triangle here, and then we'll get a C down, is what I'm looking at. So I don't think it's done declining yet. But again, if we can get that bounce off that, the 38.2 here, or the pivot area, I mean, that sets it up as, as getting up to that area that we needed to get up to really kind of feel exceptionally more bullish about it. And so, yeah, that potentially has some negative effects for other assets out there to decline or that are denominated in dollars. Remember, Bitcoin, I think pretty much every year that it's been in existence, it's declined in March. If not, it's almost all of them. So, we should expect March to be seasonally a down month. So if we look at it that way, then the idea that this is an A and this is a B and we've got a C to go lower here makes a lot of sense. It would just be in line seasonally with what we normally expect with Bitcoin, a down month for March. If we jump out here to month, in order for this month to be a red month, we'd have to drop below $45,046.80. So taking it to, to 39 to 40,000 is basically what, 12%? That's a decent red month right there. And it basically takes you right here. I mean, look at this. It takes you right here. Let's see here. Give me just one minute. Let me reload this real quick. See these pivots to show up correctly. Yeah, let's see right here. Get back out here to the monthly. All right. So as far as this monthly goes, taking it back to that, those upper 30s. I said usually it goes beyond the 100% a little bit. So you've got the R1 pivot on the monthly here, right around that 37.5, 38,000 area. So that kind of pullback for the month would be what what we would normally expect, and in addition to that, it would potentially find support on the R1 pivot. If I'm looking at that, I think that makes a good case for this maybe being a 1, 2, 3, 4, and then a 5 up. And in that case, we'd have to figure out if this is a 1, 2, 3 overall, or if this is a 1, 2, 1, 2, and that would be a well overextended, would lead to a really overextended wave 3, because right here, we're already significantly above this wave 1 swing high, which is 13,875. If we went up with the wave 5 up here around R3 pivot at about 63,000 or so, that's significantly above it, right? So we just have to see from there. I don't think right now we have to know what that is at the moment. I think we just look at what's going on here and what we normally expect and our possibilities. And, they kind of say, hey, maybe, we're going to get that pullback here. We're starting to pull back more right now on that. If we look at the daily, kind of get rid of some of this stuff here. What's most important to the daily for me is look at how fast Stochk RSI has risen. It's hitting oversold or overbought already right here. And it hasn't really moved up that much. I guess we can probably, if we look from the very, well, it didn't start rising till right here. So this low, if we look at this low here at 47,000, and then we have a high up here of 54,800. That's not quite, maybe that's what, about 17%. So it's only a 17% advance, but you've got Stochk RSI already hitting overbought, which tells us there's a lot of supply relative to demand showing up on this advance, which is not very bullish, but we'll see what happens. We can see on the daily here that we are getting this this expansion of volume. Every day kind of getting larger there, but we're getting less and less result. So if we look at the first day here, it's this nice large candle spread. Next day, a little bit more volume, smaller candle spread. Today, more volume. Right now, even smaller candle spread. So you're getting more effort, but less result. That tells you that supply is starting to overcome demand, is starting to trying to work its way into taking control. So again, it kind of adds to the idea that remember we talked about this kind of area right here. You've got this support on the February 20th candle here, and then you got the candle split here from the 22nd and the 23rd, right in that same area, which is where we're having trouble getting through. Significant area of support, which becomes an area of resistance on your daily right there. If you remember, I talked, I think probably the end of last week, or maybe even both times last week, of this area, to watch this area, that we needed a strong impulsive move and close above it on the daily. And right now we're just finding resistance there. So, again, this whole idea of a pullback here shouldn't be surprising to anybody. There's a lot of things in there that suggest that's probably what's going to happen. But until it does, the buy should still be the upside. So that's why we continue to watch these levels that I talked about, if you're trying to actively manage your position. Let me see here. Let's see here. Yes, I think the Bitcoin can still be corrective. Yes, it can still be. And again, it doing so, I'm not saying it is. I'm saying these are the two possibilities I'm watching at the moment. And if it is, then I think a lot of people, I think if this is an ABC here, I think a lot of retail traders are going to lose money on this reversal here, if it does. But again, it's not doing anything yet. It's kind of come back. It's finding support on the ascending channel median so far. But yeah, it's definitely very much possible that this could be an ABC. Sure. I don't know why people act so surprised for that. There's nothing that violates any rules or anything that says that can't be. That says it absolutely has to be bullish off the bottom here. But there are a lot of things that are potentially saying, well, it might be a top there. So that's why we got to see what goes on here. It's not about how high Stochk is. It's about how quick it got there, Hank. Remember, your Stochk RSI is like your RPMs in your car. So when you look at this, think of your RSI as your speedometer, and your Stochk RSI as your RPMs. So the speedometer tells you, your momentum. How fast are you getting where you're getting, right? Your RPMs tell you how much strength your momentum has. And so if you have a strong uptick in Stochk RSI, but not a similar strong move up in price, then it means that you've got a lot of supply pressing down on that on that demand. And it means that you need to be cautious because you could be topping out. That's the best way to understand Stochk RSI. Is that. What's your target if we're bullish and we broke the all-time? Well, according to this count right here, and, it depends on how far, does it overextend and whatnot as it goes. We're looking at minimum targets here. So let's just say we minimally get a wave 3 right here, right? So what we would be looking at then would be, let me see here. Okay. So this means that we would get, and this makes a good point. I mean, this is a great area for a 38.2 pullback. You get resistance at the at this supply structure, pull back, bounce up through it, come back, retest its support, it becomes demand structure where it heads up. So, again, still very, very good possibility here as well. But this would give us basically a 1, 2, and you have a 3 up here. It's 60,452. Let me see here. And then from that point, see here. So then we get the pullback down here again to the same area, which makes sense. Wave 4 pulls back to the wave 4 of the lesser degree, same area. That's what we generally look for. And whoops. See here. I mean, just without any overextensions, just going by our normal targets, we'd have a 1, 2, a 3 up here at around 64.56, a 4 pull back down to around 55,000 or $55,050, and then a wave 5 up here at the 61.8 at right around 63,786. Again, that's just the normal where we generally look for price to first kind of target. Wave 3 and or wave 5 can overextend. So yeah, definitely, that would be my minimum where I'd probably be looking. Now, of course, price doesn't have to get that high either, but generally, everything else aside, if these things hit the usual areas that we look for, that would be my minimum target. So yeah. Let me see here. Let's jump on gold. We had somebody ask about gold. Let's see. So gold. So gold right now, I've got a couple of different things I'm looking at. Right now, I'm looking at the possibility that maybe this is a 1 and a 2 of wave 5 here. And so if that's the case, right now it's hitting the descending channel resistance. As you can see, it's finding resistance there, also the pivot area. Basically, this would be, a 1, 2, maybe a 3, 4, and a 5 up here, or a 1, 2, 3, 4, 5. So this would be A, this would be the pullback for B, and we'd be working on C here. And if we're working on C, then usually, right now we've already hit the 70.5, which is a solid wave 3. And that's at the descending channel EQ, as well as finding resistance around the pivot. The 1 hour RSI is right there around overbought. Stochk RSI is an overbought. So there's a lot to be said about a rejection in this area. If we were to get one in here, then I'd be looking for wave 5 to come on down here around 1588 at least. And that would just be this larger wave 3. I've got it as a 1, 2 here. Well, I've got it as a 1, 2, 1, 2, and then this 1, 2, 3, 4, and then we get this 5 coming down here. So 1, 2, 1, 2, 3, and then you get a 4, which would likely be rejected at this descending channel support, and a 5 lower, which then gives us, again, the 1, 2, 3 down here, and then a 4, and then a 5. So, I'm not expecting that that price is done yet with the downside. If we do look at the 4-hour Stochk RSI is overbought. Right now we've got RSI at it's just on the bullish side of neutral. But again, it's that pivot thing there right now. It is possible. I think it may be possible that we got a 1, 2, and then a 3, 4, and then a 5 here maybe. And so if that's the case, this would be a 1, 2, 3. But even with that, I mean, if price continues up above this wave 4 swing high here, that would give us a 31.8 right here around 1751 or so. So if, I'm looking for a rejection prior to wave 4 to get us a wave 5 down here. But if it moves up above wave 4, then that means wave 5 is done. And this is the wave 3, wave parentheses 3 here. So wave parentheses 4 is likely to target that 1751 area right here. Overall, I would expect price to remain within this descending channel. If we jump out to the daily's oversold here and oversold here as well. But, again, if we're looking at this as, this larger thing playing out and things are, pretty bearish for gold, then we would expect it to continue down and daily would just kind of just stay down low while price goes down. You can see there's a greater degree of drop here. But, for the bullish side, you're bouncing off the S1 pivot. Right now this isn't bullish engulfing because if you zip in close here, if you zoom in close, you can see that it opened above where yesterday's candle closed. So it's not going to be a bullish engulfing, but it is a large bullish candle. And we're kind of filling in this gap right here, which is good. But, on the daily, if you're just looking at this chart on the daily, you should expect resistance right here. See where you have this large candle, and then you have these two kind of small candles with a wick up to the top, wick down below, and then you have another large candle continuing the trend. This area right here should be noticeable as resistance right there. You should expect price, initially your expectation should be that price gets rejected there. That doesn't mean it has to, because what you think is, okay, because of that there, I should expect to get rejected there. But if it continues up through it, then we look at the next thing. And so then the next thing becomes, again, that 38.2 I was looking at, which is still within the wick here of this March 1st. And if it continues up through there, then we look at the 50%, which gets us right around the pivot, fills in this small gap right here, and we could head down further from there. So those are the three areas I'm kind of watching. Overall, I don't expect that this is any kind of major reversal here heading up at this time. Price would really need to advance above this swing high up here at 1962 and 50 cents to really kind of say, okay, this is potentially maybe, a reversal and we got higher to go. Maybe, again, as I've been talking about, if it went higher, maybe 2,300 or something. But, as long as it remains below that swing high, your bias should be to the downside overall with gold. But these short time frames aren't looking, 1 hour, 4 hour, not looking very positive overall for it at the moment. That can change as price continues going up, but it may only change to get it above wave 4 here and get it either to the 38.2 or the 50% on that retracement. Let me see here. No, I didn't dismiss DXY being corrected because C was higher than B. I dismissed the idea that was a 1, 2, 3 corrective move right there. It's not going to be an ABC up because it advanced above the previous high. So that ABC that I was looking at was not going to be seen that way. We should expect 5 up. Now, 5 up could be a C wave, sure. But the ABC, because it went above that previous swing high, means that it wasn't going to be corrective there. It was going to be impulsive. Now, it could be part of a larger corrective thing, sure. But, yeah. So there's the issue, Hank, that you're having trouble with there. Let me see here. So, yeah. So, I mean, that's kind of where we're looking there with gold. Let me see here. Silver is the other one. The other white meat, right? Pork. No, silver here. So silver's doing, basically it looks like an ABC for a wave 2 here. So far it's retraced just 61.8. As you can see here on the 4 hour, we're almost topped out. Oh, actually we are topped out in Stochk RSI. You can look over here and see that it's at 100 when we get off there. That black number's on 100. So we're topped out in Stochk RSI on the 4 hour, which is significant. So yeah, I mean, if I'm looking at that, by the way, you can also notice that we've got a bit of hidden bearish divergence right here between this wave 2 and where we are right now. We've got higher highs here on the oscillator, lower highs here on price. For the positive, but again, until we get that move back, it could just be, a 1, 2, and we've got a 3 in progress. So what does that mean if you're a trader? Well, that means, okay, so the first bullish thing is it moved above the pivot. That's a good bullish thing. So what are you going to look at? Well, as long as it reverses without going above this wave 2 here, that's your first clue that it may be this count. When it comes back, it needs to drop below the pivot. If it drops back below the pivot, that should add confidence to your idea that this count is correct. If it drops below this swing low right here, which is 24.97, if this is 3 waves up and then it drops back down below this swing low, that locks this in as a 3-wave advance, which is corrective within this decline here, this wave 1. So that would definitely say, okay, we're coming on down here toward this. So yeah, so right now we're trying to see, okay, is this an ABC? And if so, does it reject prior to wave 2? Now, if I had to look for a point of where I'd expect it to reject, I'd probably expect it right here within this wick on this wave 2 here, which is basically your 61.8 to your 70.5. Or this wick over here, which gets you a 78.6. In any of those cases, it's right below the ascending channel support there. So often when you drop out of channels, you come back up and you retest that support as resistance, and then you fall back. So that's kind of what I'm looking for it to do here. Retest this area and then come on back. If it continues to move up into this channel and above this wave 2, it doesn't necessarily mean that it's bullish, but it does mean that this local count is invalidated. We have to go back and check it out, because if this is a 1 and a 2, and then this is a 1 and a 2, this wave 2 cannot go beyond where this wave 1 starts, which is where wave 2 ended up here. We can't have that going above that. So yeah. What's going on, LXT? Good to see you. So that's what I'm kind of looking at the moment here on that. So we'll see how that continues to play out. If we're looking at stocks, here's the Nasdaq. Nasdaq 100 here. Let me see here. So it looks like we've got to move above this wave 4 here. What was that? 12,799 and 8 cents. Let's see if I can get that there. And this has a 12,848. Okay. So if that's the case, that's fine right here. What we want to see is this wave 1 right here. We don't want wave 4 to push up into that, but it looks like it has. So if it has, our first thought is, okay, well then that is likely going to be, invalidate that count there. Let me see if I can find my other count here real quick. Let me see here, coming off here. Whoops. And so if so, then the count that we'd have to look at, because right now I've got this coming off here is a 1, 2, 3, 4. Excuse me. But I think we might have to look at something. So maybe like a 1, 2. and then a 3, 4, and a 5 here. So this could be a 1 coming down. In which case, this would be an A and a B and a C of wave 2. If that's the case, let's see here. Then, again, at 100%, wave C is going to equal wave A. Right where it's at exactly. Look at that, 100%, right where it's at exactly. You had this large gap up this morning. But, of course, it could go higher. That's only the 38.2 retracement area here. It's just below that. So that gets kind of interesting. Let me see here. We are kind of top-ish really here on the 15-minute. What does the 1 hour look like? 1 hour, we're just about top, or 0.4 away from topping out on Stochh RSI. I got a little bit of room to go on RSI. We're just above the 1 hour and 4 hour pivot here, but we're running right into all this, support resistance area right here. All this kind of area here, I guess, is probably the best way to put it. So we're within that right now. So, a reversal from here wouldn't be surprising. If you maybe wanted to look at this as a double bottom here, then that pattern would give us a target here of about right there around the 61.8. Almost. So right there about 13,225 or so. It's right, as you can see, right below that the 61.8 off this. Right there. Which is the R1 pivot. So, I mean, if you're just trading pivots, it makes sense. You push up through the pivot, you target the R1. If you're looking at retracements as a wave 2, you usually look at that 61.8. And then, of course, as a pattern target here, potentially there. A decline back below the pivot would have me looking at, just get this out of the way here. Would have me looking at cautious about any further upside. This could be the ABC done around the pivot here. It's still in that green box area. Get that decline. And if we do, again, what you're looking for is a breakdown below wave B here at 12,287 and 57 cents. If you get below that, that should say that you're down, that it's back in progress for your downside. And so, of course, if this is a 1 and a 2, well, all of a sudden you've got this target. Let's see here. Let's say it was to hit the 38.2 and retrace and, reverse from there. That gives you a wave 3 down here of 10,137, wave 5 at 94.98. If it makes it all the way up to the 61.8, though, a little bit higher targets. Your wave 3 would be around 10,535. Your wave 5 would be right around 98.96 on that. So definitely something to watch there, though. Let's see here. How do you see the possibility of the Nasdaq and S&P pushing to new highs? We'll see. Right now, so there is something called non-confirmation. I've talked about it before, which often happens at the top of bullish trends. And in this case, as you can see, the Nasdaq has not made a new high. Let me see here. If we look at the S&P minis, remember the Nasdaq is tech heavy, so it's got the harder hit here. S&P minis, I was looking at a rejection right around this higher volume node, maybe the 85.4 retracement here at about $3,900 or so, $3,910, right around there. And so we may be getting that here. The 1 hour, of course, topped out in Stochh RSI. RSI about to hit overbought. Volume dropping off substantially there. The 4 hour is topped out as well in overbought here. And so again, we're getting this right now with these lower highs. We're getting higher highs on the price or on the oscillator here. So hidden bearish divergence, which means just continuation of bearish trend if you can confirm it. So we're looking for a rejection prior to that. Let me see here. I think I've got some things missing here. Oh, there we go. Yeah. So as long as price rejects and heads back down prior to this swing high up here, the count's good. And that's around 39, 34, and 50 cents. Put this back on the 4-hour here. But Dow Jones is the non-confirmation, or is the S&P E-minis and Nasdaq are non-confirming right now of the new high that we see on what you call it here. The Dow Jones, geez, oh whiz. I think it's made a new high. Let me see here. As of this morning, we had 32,148. 32,150. Yeah, so it's made a slightly higher high here. Could this be a 1, 2, 3, 4, and a 5? Sure, it could. Which would mean 3 back and then 5 more up, to finish a wave 5 here. But as I said, often what you'll get at the end of bull runs is you'll get a non-confirmation. So in the case of these indexes here, Dow Jones, which is a more broad-based index, may make that higher high, the new all-time high. But the other two indexes would then not confirm that. They would not make new all-time highs themselves, new higher highs themselves. And that would let us know that, there's a fracturing in the market. And so then we would expect that to lead to lower prices. Yeah. So that's what we'd be looking there. Let me see here. Let's see here. I know everybody gets excited about strong movements in price, but if you've had a strong decline prior to that, you should expect a strong, like a snapback type rally. You should expect that because you've had such a strong, overdone decline. So everybody kind of and their grandmother jumping in there to jump on that advance. But that does not mean that you're going to, that it's bullish. Most of the time, that's just a corrective reaction, or we could say an overreaction because of the strength of the decline leading into it. So yeah, definitely watch it, but often that's what we get there. So we'll see. We'll see what happens there with that. What else can we look at here? Man, I'll tell you what. The dollar against the yen, man, continues to just pound away here. So right now, I'm looking for finish this decline back toward around 108.25. And then I'll look for an advance up here toward a minimum target of about 109.84. Now, right now, I've got that as wave 5 of wave circle 3 here, which is just 3 of this larger 3. So that's what I've got it at. Now, it could potentially be... It is possible that this 3 is actually this one here. So the move up to 5 here would actually be for this wave 3. So we'd have this going in as a 1, 2. And then this would basically be your 1, 2, and maybe 3, 4, and 5, so it gives it a 3. But then that 4 should be a deeper pullback, and then you'll get a 5. So if we're heading down below 107.947 here, that means we're probably on this 3, this larger 3. And we've got the pullback then toward at least 107.38 and potentially 106.81. If I look at that, I mean, there's a lot of, you can see a lot of structure here. High volume node there. We got hit right in this high volume node area here. So, but for right now, I'm still looking at this as this wave 3 here, interior to this wave 3. Again, the 4-hour is already reset well into oversold here. RSI itself is actually dropping quite a bit there too. So a lot of possibility on that. You get 4 to the 4 of the lesser degree. So again, that just makes this a 3 up here. And then we'd likely get a 4 about here. And then we'd have that 5 going up of this larger 1, 2, 3 up here. And then 4 and then 5 up higher, finishing it out. But the story here has been this relentless kind of advance. And remember, the USD yen makes up 7 to 8% of makes 11%, just over 11% of the DXY's weighted basket value there. Now, if you look at the Euro USD, that's the one that makes up, 50, whatever it was, 56% of the DXY's value. And that's why the Euro USD and DXY often look, like mirror opposites there. Right now, it looks like we've got a 1, 2. And so this, I don't think this would be a wave. I don't think this is this wave circle 3 here, because it's short. If we pull this up here, we should be looking for it to be down here at this 1.1705 area. So I'm thinking this is just one of what's going to be a really overextended 3. And so if that's the case, we should expect likely that the pivot will hold. At least the 50% right around that area. Could go above, but I would normally expect the pivot to hold here and look for that decline coming down, because if this is a 1, 2 of 3, we've got much lower in store here for the Euro USD. Your 4 hour, as you can see here, is well overbought. Still has room to go higher, but I think as far as some kind of long-term reversal off there, I don't see that this is really an ABC here at the moment. Could be, but for right now, it does appear to be much more, especially while it remains below the pivot there on the 4 hour, much more likely to be, bearish as a 1, 2 working on our large 3 overall, which will be way down, not here, but it'll be way, way down from that. Let me see here. Your daily is where it is here. Let me kind of take some of the stuff off. You can see right here that you're finding support on the daily high volume node structure here, which is right here where all this support is. So obviously, if you lose this area, if you're dropping down below this area, all of a sudden you're going to have a lot of supply pressure on price here, a lot of downward pressure on price. So if you're bullish, you want this to be the low end for it to hold, because if you're dropping below this, all of a sudden you're probably looking at least getting down here 113 on that there. Stochastic RSI on the daily here, almost bottomed out, trying to cross bullishly here. Again, could just be leading to a short-term move up here. If we look at, we were talking about the 4 hour and 1 hour pivot a minute ago, but at the end of the day, what really matters is this larger daily pivot. So if you can see a move above that, then things start looking pretty interesting. If you can get above this swing high right here at 1.22432, then that would say this is probably an ABC and we're heading up one more leg higher. But right now on the daily, we rejected the R1, fell through the pivot, pushed up, got rejected the pivot, fell down the S1. Normally what we would expect is to get rejected the S1 and continue down again. So we'll see how that plays out. But right now the bias is still to the downside based on market structure and price action right now. So we'll see here. I made good money on this move down. I'll be looking to enter short again if we can continue this decline. Dogan, what's going on, man? Good to see you here. Let's see here. Oh, if there's really anything much to show you guys here other than that. So I think that just might do it, guys. So, kind of coming back here, we're starting to get further decline here. But now it's trying to bounce a little bit. We'll see what we can see here. Does it go above and get out of this supply structure? If so, again, we start looking toward that potential wave 3 there. But, if we're losing this area right here with Bitcoin, we should expect a pretty good drop back down to 52.1, 52.2 in that area. And then potentially a bleed on down further. And, if we lose the pivot, your bias should definitely start, if not already, it should start increasing to the downside through that, dropping through the ascending channel. Oops, right here, the ascending channel support. It should also kind of add some bearish bias to your side. But it really comes down to, does it drop here below this swing low? This 46,300 area. If it's dropping below that, and this only being 3 waves up, you should probably be looking, again, lower down here toward a minimum, that 39 to 40,000 area. Like I said, from where it's at right now, 1-to-1 wave C will be equal to wave A here at 39,479. But price may end up going, toward that 37,000 area per the larger time frame that we talked about earlier. Yeah. So we'll see how this plays out here with that. But that's what I'd be watching. Don't let anybody fool you. It is not definitely going up. It's making a good case for it. It's quite possibly. That's why we've got the bullish count on there. But especially if it can't overcome this area here and it starts pulling back, you've got your levels to watch to increase your confidence that it's probably headed down lower. But there's absolutely nothing in this chart that says, there's nothing going on here that says it needs to go up. The most bullish things I can probably see here is higher highs and higher lows coming off the swing low here and above the, remember we talked about that bearish market structure here, which we had highs and lows. So that's potentially bullish. But again, if it's just a wave B or a wave 2, you're going to have that breakdown of that bearish market structure there, and then that becomes the larger bearish market structure. But it's a thought, potentially bullish. The other thing I do like is the retest of the pivot here and then the move up. But we absolutely have to see the continuation up through the pivot here. And then, of course, above that swing high to really kind of say it. If we lose it right here, even though we bounce off the pivot, if we're getting rejected the R1 and we come back down, odds are likely that we could fall below there, which then just increases the odds, that we're heading lower here as we talked about. Along the way, keep your eyes open there on the DXY. A lot of people are trying to find reasons why they shouldn't be watching it. I'm telling you right now, you should be watching it. It continues to ultimately be what's controlling everything else. And again, for the reasons I've given you time and time again. If the value of the dollar is rising, it takes less dollars to buy something. So the value of that thing, because it takes less dollars, means the value of that thing is necessarily going to drop and drop. So a rising dollar has a negative price effect on assets denominated in dollars. I hope that makes sense, guys. So that doesn't mean that things can't overcome that, but there has to be a significantly excessive demand over the supply that's hitting the market in order for that to happen, because it has to do that just to break even, just to keep price level with a rising dollar. But then you have to do even more to, again, have your price rising as the dollar's rising. And we're not talking, again, about a day or a couple of days of movement or something like that. We're talking about overall movement. It takes time to rotate out. Especially when, if you're looking at the dollar here, you're talking about a rotation off this year-long decline. Almost a year-long decline here. It's not going to happen overnight. So you're going to have some days where things will move together, other days where they may not. But we'll see how things go. I'm not convinced yet. Like I said, we definitely need to see a move above this swing high up here, this 94.742, We have to see a move above that. The daily right here could become bearish engulfing if it closes below 91.985. And so that would just be a pause. You would need to see then continuation the next day coming down to kind of say it may be a reversal on that. But yeah, could be maybe an ABC here. No, see, this was my problem. This is what Hank was referring to earlier. For this to be an ABC, it doesn't make sense when this is here. The only way that I could see this being an ABC is if this was a wave Y. So this would have to be a W, this would have to be an X, and then this would have to be a Y, because your Y will be ABC. But if you're just looking at an ABC, then this can't be just 3 waves. It would have to be 5 waves. And that's what I was getting at earlier. But any move above this this supply structure swing high up here at 98.8 gives you, bullish support there for a move potentially above that wave 4 there. So yeah. But again, this would have to be a WXY here. So this would have to be a W, which means an ABC. This has to be an ABC, which it looks like it is. We've got it as one. And then this would have to be an ABC here. And you just would have to make sure you can make that work here on these smaller time frames. So potentially. But we'll see what goes on with all this. We'll see if we get that continuation up. If we're dropping through the pivot, I wouldn't be feeling quite so bullish. If you're going to be kind of bullish, if you drop below the 4-hour pivot here, that's not a good sign. Again, you don't want to see this moving up to the R1, getting rejected and falling through the pivot. You might get a bounce at your S1, but then you'll probably continue on lower there. But, if it does that, that may be what Bitcoin needs to make its final push up. So depending on how you're looking at that, sure. So this would be B of an ABC down. Huh? Oh, you're looking as a WXYZ. This would be W, this would be X. You're looking at this as a Y and then an ABC down. No. I'm not sure how you're looking at that, Hank. Let me see here. WX. Oh, you mean a WXYXZ? Yeah, okay, so this would be a W, this would be an X, this would be a Y, and this would be an ABC down for X, and then you'd have, an ABC up for Z. Yeah. But anyway, so, no guarantees yet either way, but bonds doing their thing right now, and I think, real rates are really going to kind of be the story here. And the Fed's going to have to go. Oh, somebody was asking earlier about the reopening of the economy and everything. Well, here's the thing: if real rates, kind of really assert their dominance for the Fed's going to have no choice but to raise interest rates. And if we raise interest rates, then that will leave you with a all these companies that are just trying to come out of the pandemic, especially if you want to look what we're talking about with zombie companies and whatnot, that becomes really dangerous at that point because they're already on borrowed time. So if they've got to pay higher interest rates now to borrow their money, then that definitely hurts them a lot. And so, I think that ends up becoming the story right here. Everybody's like, oh, I don't see how it can happen. I don't see how it can happen. I think that's what it is. I think it's what we've talked about last year coming into this year was likely to happen. So, yeah, I mean, if I'm looking at that, I'm concerned about real rates as far as, what the Fed says it can or can't do. Remember, at the end of the day, the Fed is just going to say what it needs to say to get you to hopefully do what it needs you to do, because at the end of the day, it's y'all. It's me, it's you, it's companies that are increasing our debt levels, taking out more debt, borrowing on more credit, not paying off loans, buying things that we don't need. This is all what the Fed needs for the economy to continue to rise, to see that continue to go up there. So, yeah, that's kind of where we're at with it, I think, as far as that goes. So I think that'll probably still be the real story here. A lot of people not really watching real rates and what's going on with all that. So, oh my God, my voice is just about out here, guys. So I'm going to have to get going. These are the levels I'm watching, things I'm watching. Don't believe anybody that tells you something is necessarily bullish or necessarily bearish right now. There's a lot of ambiguity in what's going on. And so it makes it, unfortunately, I think, there's a lot of people out there who say that things are definitely bullish with Bitcoin, that things are definitely bearish with the dollar. And I just want you guys to know that that isn't the way it is. Things are not definitely one way or the other right now. There's a lot of ambiguity in there. I mean, even with Bitcoin locally here, pattern-wise, I mean, you've got this going on right now. That's a topping pattern. Ascending, broadening wedge. That suggests that it's potentially a top right here. So again, we start watching those levels I talked about on the way down. Man, my voice. With what's going on there. So just pay attention to it, guys. Don't just accept things that are said, even when I say them. Don't just accept them as truth. Go out there and learn a little bit. Go out there and do some research and do some stuff on your own. And some of y'all may be like, oh, I don't want to do all that. I hated school, But, at the end of the day, guys, you're talking about your real money here. And, I continue to talk about the importance of having respect for your money, right? You had to do something. You had to trade something for that money. So whether it was time in school, getting an education, and or time at work that you've had to put in and you're getting paid in return for that, or selling something to get that money, you had to do something to get that money. And so you need to respect it, because if you don't respect it, then you're not going to take it seriously what you're doing here. If you don't take it seriously what you're doing here, you're going to treat it like a scratch-off ticket. And if you're going to treat the market like a scratch-off ticket, you're going to lose. Seriously. So I think that's one of the really important things that you guys need to understand. I don't care if it's just $100. And you're kind of like, man, it's only $100, so I need to double it and double it and double it and double it and double it as fast as possible so I can be rich. And then I promise I'll slow down and stop. But you won't, even if that were to happen, guys. You just continue doing it. Treat your trading like a job. And when you're trading, the goal is to create a system that you can mechanically utilize over and over again, but that works for you. It doesn't matter about anybody else. It has to work for you. Your goals and situation, your time frames you can trade. Whew, man, your level of risk, your level of risk aversion or risk tolerance. Sorry, guys. Listen, I got to go. Sorry, it's my voice. I'm too much today, it looks like. And then with the weather out there, I think maybe affecting it a bit. But just keep all that in mind, guys. Don't blindly don't blindly buy into anybody saying that, that's something, some market or something is definitely bullish or definitely not. There can be, it can be more bullish than not, but it doesn't mean that it's definitely bullish or definitely bearish. All right? All right, guys. Hey, listen, I appreciate you guys checking in with me as always. Sorry I got to cut it a few minutes short here, but as you can hear, I'm being told by my voice that it's time to get out of here. So we'd love to have you join us over here at howtotradetowin.com. If you do join us here, guys, remember, just log into your account. And then, by the way, don't use a Hotmail address. Members seem to be having issues trying to receive the emails from the system when they use their Hotmail address. Use Gmail, works great. But log into your account. At the top left side of your account, it says update Discord username. Click on that and then type in your Discord name exactly as it is. If you're on Discord, just go all the way down to the bottom left where your name and everything is and just click on that. It'll copy it. Paste that exactly as it is in there. It's your username, the pound sign, and then the 4-digit descriptor. And if you do that, you should have access within about a minute at the most to Discord, whenever you want to get there. The programmer had originally set it up to have an hour cycle. I talked to him, whatever, and we got it down to about a minute, so should be pretty quick. If you don't come in pretty quick, feel free to DM me on Discord. You know, just join the free side of it. You can get there, by the way, guys. If you come here, right here, this Discord link, or on the website itself, you can just click this right here, and it'll take you to the free side, and then you can DM me from there. But anyway, just want to kind of get those things up. We're going to update our instructions and everything for everybody, so that way we've got it all there. I've got a little helpful bot I'm about to add to the site that'll answer a whole bunch of your questions and whatnot that you guys may have when first signing up. So we'll have that all on there as well. You guys have a fantastic day. Thank you so much for joining me. If I don't see you guys over in Discord, then hopefully I'll see you guys joining us back on Friday at 11 a.m. Central Standard Time, and we'll do this again, and we'll see how the markets have progressed through the week, all right? You guys have a great weekend, or a great week here. Gosh, I'm already trying to get to the weekend. Remember, the only thing you control in the market is how much you lose. That's it, guys. So no matter what you're doing with anything, make sure that you work on that risk management more than anything else you do, okay? Take care.